Hey everyone, welcome to Financial Revelations. I am your host, David Safransky, and it's my anniversary edition today. What anniversary? Well, my wedding anniversary is today. 33 years ago today, on a Friday in Elyria, Ohio, I married my wife. High temperature that day, about 91 degrees, windy, very sunny. So happy anniversary, honey. Love you. She's the luckiest woman alive, I guarantee you. She realizes that millions of women would kill to be where she's at, and she handles it appropriately. So you can reach me, you could see me, you could hear me. Twitter, SkiBucks1. Also, you can call here. The number's scrolling below me, 1-800-344-2534, and you can actually talk to us. So if you have a question or something that you'd like to see addressed on the podcast, call in, email Kory at Kory@epsf.com, also scrolling below me. And we do have some exciting news. Of course, as you know, the Sin of Retirement, the book Sin of Retirement is out, and it's in print. It's going to go through a couple of reprints and things like that, because as you read it, I probably had one of the worst spellers in history proofread it. Probably not the best idea, so we'll take a few of those out. But Melissa did a great job helping with the book and being an integral part of getting that to press. So Sin of Retirement is out. You can go to sinofretirement.com and buy the book. It'll be available on Amazon very shortly. The ebook is out, so if you like to read on your Kindle, your iPad, you can get that at the website. You can also get some financial merch at the website. My favorite is the hat that says "I suck at investing." We also have coffee cups that say "I suck at investing." All of our clients are going to use those coffee cups when they come in to reinforce why they're here. So, also the audiobook is in recording as I speak. So the audiobook will be out very shortly. You know, it's exciting to write a book. I've had this idea for a long time. I feel like God laid it on my heart, so here it is. I'm going to share it with you, and I think you'll really like it. I reread it again over the last couple of days. I love this book. I love it, and it sounds like me because I wrote it. And so, of course, it's going to sound like me. But if you've ever spoken with me, if you've ever heard me on the radio, if you sat in this chair that I'm sitting in and been in my office, you'll say, "Oh yeah, that's David." So I want you to get that book. It's not a book about investing. It's about something much more important than investing. And I know, coming from the money guy, you'd say, "Well, shouldn't investing be important?" Well, investing is important. It's going to be something that we need to do because we're living so long, and not just living long, but living long healthy. We're healthier now than we've ever been in history, living longer than we ever have in history, almost. I think we went back a couple of years due to the pandemic, but by and large, we're living way longer, way healthier, and 25% of our life is going to be in retirement. So you're not going to check out. You're going to repurpose. You're going to pivot with purpose. That's what I want you to do. And so that's what the book is about. You could also now, when you retire, you can go on mission trips. Oh, by the way, we're doing a mission trip in March. We don't have a lot of space left, believe it or not. People really want to go on these mission trips to the Amazon. It is so awesome to do these things, these short-term mission trips, because people think, well, am I going to like doing something like this? What's it going to be like? Well, I could do anything for 24 hours that I really don't want to do for the rest of my life. This is 11 days. You go to the middle of nowhere. You're in the middle of the jungle, sleeping in a hammock on a boat, in villages. We take a Starlink with us so you can stay in contact with home. 11 days, short-term mission trip. It's not expensive comparatively to other mission trips, because we want to get people to go. It's not our fundraiser. So it could be, but it's not. And you get a taste of missions. You're going to be serving people that do not know the name of Jesus Christ and do not have fresh, clean water, and we're going to meet those needs. Now, I'm not 100% sure we're doing a well dig on this next trip, but we're going to be in villages. We're going to go to places that about 1/1,000,000th of all population that's ever existed has ever seen, but you're going to see it. You're going to put a footprint in the bank of a muddy river off of the Amazon. I mean, nobody even knows these people are alive if it wasn't for the missionaries that we have there. And you're going to be able to do that. So call us or email us or talk to us if you have an interest in taking a group or going yourself. A lot of people want to bring young kids or send their teenagers. Well, we don't take unaccompanied minors on the trip. So if your minor's going, you're going. It's just easier that way. You'll understand after we talk. But so let's talk a little bit of investing. I want to get to investing today. It is my anniversary, so I'm golfing today. Look at my wife's face when I told her, oh, yeah, I'm golfing. She's busy anyway, so she wasn't waiting around for me today. We're going to go out to dinner tonight and with my in-laws, and then tomorrow night on our own. We do that. We go out to dinner on our own sometimes. The inflation numbers came out, the Producer Price Index, otherwise known as the PPI, and it was hot this morning. It was high. And that's going to put a damper on any talk of a 50 basis point rate cut in September. I do think that a 25 basis point rate cut will happen. That probably will happen because the jobs numbers they're not great. They're just not great. And the real estate market is really taking it on the chin. Just ask your local real estate agent how business is this year, and they'll lament to you the cost of a mortgage right now. And that is real. You know, when you cut rates or you raise rates, it takes about a year for that rate cut to filter all the way through the economy. You think, well, gosh, we raised rates, everything's higher. Well, yeah, that's true. But people that were going to buy a house 3 months from now, they're affected 3 months from now. And the cost of those things, the money that it draws out of the economy when you hike rates and the amount of money it puts into the economy when you cut rates, it takes a while to get all of that money filtered through. So people want to see an immediate bump, and there is some immediate bump to a rate hike and some immediate bump to a rate cut. But by and large, the full effect takes about a year. And I think we're seeing a lot of that full effect happen right now, even though they cut rates last year into the election, which, you know, I've talked about this ad nauseum. I'm sick of talking about the Fed. I thought that was just a political move, and it's very rare that you see that. I don't like to see it, to be honest, even if we need it. I'd rather wait till after the election because I feel like they're trying to push the needle. And so, how are we reacting to this here at the firm? Well, I'm preparing for a weak September. September is rarely a great month. October, you know, we've had some pretty rotten Octobers, but we've had some pretty rotten Septembers. And you know, how do we do that? What's the functionality when I say we're preparing for a weak month? Okay. Why do I think it's going to be weak? Well, because I think the data is not going to be that great. And we've had a big run into September, and we're going to get a rate cut, but up until that time, I think it's going to be pretty weak. So what I don't want to do, and I want to go over this in a minute and tell you why, but I don't want to be uninvested in case I'm wrong. So, you know, I know that's hard to believe, but I have been wrong before. It doesn't happen a lot with investing, but it does happen. But I do want to have cash in case I'm right. So the discussion with a lot of people right now is, let's raise a little bit of cash into the portfolio. And am I talking 30, 40% of your portfolio? No, I'm not. I'm talking about 10, 12% cash in a portfolio. And how do I do that? Well, let's say I have some long-term losses in there, and I think, well, look, I like that stock, but I don't think it's going anywhere in the next 30 days. I'm going to clock that loss now and buy it back in 31 days or buy something else. So you could start to call some of your losers right now More likely than not, though, if you're with us, you're going to be taking profits off of winners. Not all of our stocks are winners. I don't want to give you that impression. We do buy some things. We're not right about everything. And we don't need to be right about everything. We just need to be right the majority of the time, which is not as hard as you would think, actually. So, but when you watch, again, I have these two I have this big TV in back of me. And as I keep it on all day long, and I'm either watching the news or financial press or press conferences or conference calls or whatever it is, you can get a lot of that stuff. You can get a little bit more nuance if you go to YouTube, because you can get individual videos there. But if you're just watching the financial press, they'll say things like, it'll be a hedge fund or a mutual fund. We took Meta off the board today. So they sold all of their Meta position or whatever the stock was. I'm not saying, I'm just using that as an example. But they don't care if you have to pay tax on that. They don't care. They don't pay the tax. They don't care if you have to pay the tax. They don't care what your tax implications are. They don't care about your tax bracket. I do. We manage individual portfolios, so we're trying to be tax efficient. Why are we trying to be tax efficient? Because I want you to keep your money. It's just that simple. It's not that I don't want to pay the government tax. I don't. I just don't want you to have to pay tax right now. I want you to pay the least amount of tax as possible. So we're looking at long-term capital gains, where for most people that's a 15% tax, as opposed to your income tax, which could be much higher. So, even if you're in the 28% bracket, you pay 15%. I've saved you 40+% in tax by taking a long-term capital gain. So those are the things I care about. So we're going to raise a little bit of cash. Now, we're going to take some profit, and I want you to think about this for a second. What are we trying to do when we invest? What is the mission of investing? Is it because we're great people and you want to sit in the office and be my friend? Well, that may be ancillary to what we're really doing, but that is not the mission of investing. Is it because you're a believer in free market capitalism and you want to support it? Well, that also may be an ancillary reason, but that's not the reason why we invest. The reason why we invest is to win the game. We want to make money. We want to make you money. And when you manage money for a fee, the more money I make for you, the more money the firm gets compensated. That's the reason why we invest. In its purest form, okay? We want to make you money. You come to us or you go to somebody else because you want to make money. And that is not a bad, unaltruistic thing either. It's okay to want to make money. Money is not evil in and of itself. The love of money is evil, and the root of many kinds of evil. That's what the Bible says. It's not money. It's the love of money. It's our attitude towards money. So many of the things that we do, right and wrong, they just start right here in our heart. And if your heart is, I got to have more money, I got to hoard, I got to have more money, not to give it away, but just to hoard it, to have more, to be selfish, I think you're making a mistake, a horrible mistake, because there's never enough money. J.P. Morgan used to say, I don't know how much is enough money, but I think it's just a little bit more than what I have. He was the richest man in the world. He was the Bill Gates of that time. Bill Gates is still trying to make money. Elon Musk is the richest man that we know of right now. I think he just makes money because he's got good ideas. I don't know what his attitude towards money is. He doesn't own houses. He couch surfs on friends' couches or sleeps at the factory. So he seems like, even though he's the richest guy in the world, he's kind of a minimalist. Kind of like that. I kind of like that. I like that. So, and what we're trying to do is we're trying to get outsized rates of return. We're trying to beat the market at every turn, everywhere we can. We're trying to beat the market. So what we need to do, and I'm going to blow up some of your perceptions about how the market works right now, because people think, well, to get an outsized rate of return, we got to have every stock beating the market. That's not true. Look, all of your investments are not going to beat the market every year. We just need, what we need to do, what we try and do here, is we want to take a little sliver. We want to figure out, hey, where do I think we're going to outperform this year? What do I think the markets are that are going to outperform? And we want to overweight them just a little bit, maybe 3, 4, 5 percentage points overweight in that market in a particular company. And I can tell you right now, our portfolios right now are outpacing the market this year because of really 2 stocks that we own pretty much across the board. Not for everybody, but we own it for a lot of people. And that's giving us outsized rates of return. You don't need to have everything performing at 100% rate of return every year, but you do need a few that are outpacing the market. And that's what we're trying to do. So what do you got to do right now? When you raise cash, you got to be ready to buy good stuff on awful news. Or in other words, buy the chaos. If you go to my website, sinofretirement.com, you could buy a shirt that says buy the chaos. You can buy my book too. And I want you to have the book. Or buy when the blood is in the streets. When the investment blood is running in the streets. When everybody is running that way, you run that way. I was talking with somebody yesterday, and we're looking at the portfolio and deciding where to take gains from. And I'm thinking, oh my gosh, I love every one of these companies so much. I hate to sell them. But that's what you do. This is where the discipline of investing comes in. This is where I see what I call homeowner portfolios. A homeowner portfolio is like, let's say, for instance, you do a project in your kitchen and you finish it and, you're like 88% done. Well, that's done to a homeowner. And your friend, the contractor, comes in and he looks around and he sees the 38 things that you did that he would never do or get away with. Okay? That's a homeowner project. I see that in homeowner portfolios. The minute you show me your portfolio, I'm looking at the things that I would never do in a portfolio. Some of them are overweighting. Some of them are too spread out, too diversified. So you think, well, if I own 158 things, I'll never lose money. Not true. Think of it this way. If you smash your toe, which I did recently, it's funny how everything hurts. Everything hurt for like 2 weeks. I mean, this toe, it's still swollen. I did this like 2 months ago. Everything hurt. My toe was hurt, but everything hurt. And sometimes, like in 2008, everything went down. It doesn't matter if you own 1 stock or 1,000 stocks, you were probably losing money. So we just need to pick the right things, own them for a long period of time, and be willing to sell little pieces. So you build a portfolio, you manage around those pieces, and that's what we're doing right now to prepare for what I believe could be a weak September, maybe October also. And then when you buy that, and think back to Liberation Day. Liberation Day was the worst. We lost 20% in the market, but if you bought it, you have outsized rates of return this year. And that's why in a homeowner portfolio, homeowners would sit there and say, well, I can't buy this. It's too bad. I look at it and say, I can't avoid this. It's too good. I got to buy low. And that's what we do. Remember, sinofretirement.com. It's scrolling beneath me. I am 100% sure of that, even though I don't see it right now. The ebook is available. Merch is available. I have, I don't know if these are available on the website right now. Buy the Chaos, Free Market Capitalist, and my favorite, I love Stepped Up Basis. And if you're, like my kids are going to love Stepped Up Basis because I built a vast Safransky estate for them that they're going to inherit at Stepped Up Basis when I die in like 75 years. I think I'm going to live to be 150. I take such good care of myself. And I feel like I owe it to you to live long so I can keep giving you good advice. I am David Safransky, a real American. It's my anniversary. A true red-blooded patriot and the voice you can trust.